Hey everybody, Thomas Morgan here with 1031navigator.com. This episode is a mini-sode. It is an excerpt pulled from our recent conversation with Aaron Crowley from Asset Preservation, Inc. Asset Preservation is one of the largest qualified intermediaries in the country. This episode explores a specific listener 1031 question. And remember, if you're looking to move from a management-intensive property or a low or no income property into a secure, long-term net lease property that provides peace of mind, then go to 1031navigator.com/free, and I'd be happy to provide a free 1031 replacement property consultation. I only do a couple of these a month, and right now I only have one left. You can go to 1031navigator.com/free. Enjoy the show. Does a 1031 exchange defer depreciation recapture?
Absolutely.
And maybe we should explain what depreciation recapture is first.
Okay, so when you do investment properties, you're going to have it on your Schedule E. On your Schedule E, you're going to depreciate and write off depreciation. You're going to write off expenses. You're going to treat it as an investment property. Now you're going to sell it, and maybe you've owned that property for 20 years. And every single year you've gotten a tax benefit with that depreciation. You may have created a loss, and that would have given you a bonus. So you've used that depreciation time and time again. It's had a bonus. Now you pay the piper. So now when you sell that property, the IRS, no matter what your income level is going to tax you at 25% by bundling, taking all that depreciation, recapturing it, and now paying tax on it. So the longer you've held a property, the more depreciation. One of the questions I always get asked is, what if I never depreciated? Well, the IRS says you should have. And just because you didn't does not let you off the hook for the depreciation recapture tax that you should have paid. So if you're not depreciating, you should be, because you're going to pay the piper at some point. So depreciation recapture is one of those that is the taxes that is deferred into a 1031 exchange.
And I recently read one exception to that, and I don't want to go into the whole thing now, but that's if you do a installment sale and you treat the seller financing in or outside the exchange. There's one of those, and I don't have it in front of me, but triggers the depreciation recapture is due at that time.
So I say depreciation capture is like a cockroach. If you did the primary home, you use your primary home exclusion, and you rented it years ago, that depreciation recapture is still due. If you do an installment sale, that triggers it. So really, it's difficult to get rid of that depreciation recapture. You're going to owe it. But you've gotten benefits, so it's kind of a wash.
But if you do a full exchange, like a normal exchange, the recapture is deferred along with the capital gains.
Correct. Until you cash out. Okay. However, if you have boot and your tax rate's 20%, the depreciation recapture rate is 25%. So I'm not an accountant, but the accountants tell me that if you have $80,000 worth of depreciation recapture on your property, but you're taking out $30,000 boot, it isn't going to be taxed at 15% federal or 20% federal. It's going to be first tax at the highest rate. They're going to take that depreciation rate first.
Okay.
Yeah. So it's the IRS.
And that's a lot of people, clients come to me, and that's where they get surprised. You said like the cockroach, they just calculated, my capital gains rate is 15 or maybe 20, depending on where they are. And they don't realize there's another 25% based on all the depreciation they took during the holding period.
It is amazing how that it adds up.
Right.
So if someone has a loss and they've depreciated all those years, they still have a tax.
And that's when it makes a 1031 even more important and more valuable to do.
Correct.
That does it for today's listener question. Hopefully you got some real value out of that. To ask your own commercial and investment real estate question related to 1031 exchanges and or triple net properties or other passive income real estate, please visit 1031navigator.com/ask. Again, that's 1031navigator.com/ask. You can also leave a question by leaving a direct voicemail at the podcast hotline 970-300-1994. Again, ask your question by leaving a voicemail at 970-300-1994. Thanks for listening to the 1031 Exchange Passive Income and Investment Series. Hopefully it's helping you create, build, and protect your wealth. Talk to you soon.
And remember, this show is provided for your informational and educational purposes only. Be sure to check with your accountant, lawyer, and/or other tax professionals and advisors before relying on this information. Although the information contained herein is believed to be accurate and reliable, we do not guarantee its accuracy or completeness, and it is provided without warranty. Common sense is the best practice.